Major funding for these programs is provided by the CUNY TV Foundation, Capital One Bank, Geneva Burns, Gian Tomasi and Webster, Chase Commercial Term Lending, Perfect Building Maintenance, the Wickoff Group, New York Community Bank, M&T Bank, Kilroy Architectural Windows, New York's Window Company, Greenberg Traurig, LLP. Additional funding is provided by AKA Hotels, Corman Communities, Aerial Property Advisors, Bank of America Merrill Lynch, Bank Leumi USA, Briarwood Organization, Colliers International New York City, Cushman & Wakefield, Customers Bank, DDG Partners, Dime Savings Bank of Williamsburg, Eastern Union Funding, Flushing Bank, Friedman LLP, Herrick Feinstein LLP, Hersha Hospitality Trust, Investors Bank, James D. Kuhn Real Estate Institute at Syracuse University, James Orphanides Centurion Holdings, Margolin Weiner and Evans LLP, Madison Realty Capital, Massey Knackle Realty Services, Matone Group, Meridian Capital Group, Newmark Grubb Knight Frank, New Banks, People's United Bank, Popular Community Bank, RBS Citizens Bank, SJB Properties, Sterling & Sterling, Stonehenge Partners, Urban American, and These Friends.
So there's this term, community bankers. What's a community banker? Is Citibank a community banker? Is JP Morgan Chase a community banker? Community bankers are a unique brand of individuals who service the community. So today, I've brought together 4 community bankers to provide their insight on what they're doing and what they're trying to serve in the community. My guest today includes John Buren, who is the president and CEO of Flushing Bank, Kevin Lynch, who is the chairman, president, and CEO of Oratani Bank, George Marillis, who is the executive vice president for the New York Metro Region, C&I, Commerce and Industry, and Business Banking for Customers Bank. And last but not least, my friend who travels from Staten Island once in a while, okay, but he has his office in Williamsburg, Vincent Palagiano, who is the chairman and CEO of the Dime Savings Bank of Williamsburg. So since you are our distinguished elder statesman over here, I'm going to make you feel good about this. What is a community bank? I mean, you're all involved with the community bank. You're involved, the 3 of you are involved with the Federal Home Loan Board. Well, what is a community bank in your opinion?
I think the community banks serve a very special function in that we will do things the large banks won't do, particularly local loans. Our average size loan is probably about $1.5 million. If you go to one of the major banks, they're not even going to talk to you if you go in there for $1.5 million loan. So without the support of the community banks, I think the smaller communities, not the Midtown Manhattan, but the communities in Brooklyn, Queens, Staten Island, the Bronx, and the outlying areas of Manhattan, we support those communities.
But the majority of your community banking that you do is predominantly real estate.
That's correct.
Okay. You have a different approach, and you come out of 2 very large banks. I mean, you were with Citibank, and then you were with Fleet Bank of America. How do you see, and how does Flushing see the role of a community bank?
Well, I think first off, we lend in the community. We're not lending in Abu Dhabi or in Mexico. All of our assets are local in the community. And we not only look at real estate as being a way of helping the community, helping to finance the economics of the community, but also small business as well. Small and medium-sized businesses are obviously critical to the functioning of a strong economy in New York City, and that's our focus. So a significant portion of our portfolio is also C&I.
Now, what's interesting is you're the New Jersey bank, but you have a loan production office in New York City.
Yes, we do.
Okay, so I hate to say, are you poaching from these individuals over here?
Poaching, I'd never.
I
there's plenty of
wouldn't.
fish in the,
I wouldn't say poaching. Are you taking some business? I mean,
I certainly hope so.
okay. Why do you open up the loan production office in New York City?
We're trying to grow the bank, and we have more than enough capital to grow. We're at a very high capital ratio, 18%. So we need to continue to grow our portfolio, and we're doing all the loans that we can in New Jersey, but we also do loans in New York, Connecticut, Pennsylvania, upstate New York, and we've gone down into Delaware and Maryland also.
Now, you're the new kid on the block. So are you a community bank or are you a commercial bank? I'd look at you, I mean, Customers Bank is like 4 years old.
Well, new kid on the block is relative. I will say that we've been here before through our chairman, Jay Sadu, who was, I would say, at the forefront of Sovereign Bank. We are, in fact...
Changed today to Santidad, USA.
Indeed. We are, in fact, a commercial bank, but we also consider ourselves community bankers.
So what do you do that's different than the three other gentlemen here?
In how we deliver our services. Our focus is not on commercial real estate. It's on commercial and industrial lending, as well as private banking, but not in the traditional sense of, trusts and our lending to art. What we consider private is the way that we deliver our services, a very high-touch, high-tech model of delivering ordinary bank services in an extraordinary way.
You know, it's interesting. As I said to everybody, prior to the show, I read the presentations that all of you have done for Keith Burnett and all the other groups over there. And, you have, in Flushing, you have this this internet banking, it says, okay? How has the internet banking helped get deposits for you?
When we look at our business, we try and cobble together businesses that are high touch and businesses that are more efficient, let's say. The igobanking.com business is one that is highly efficient. It's a great way of gathering deposits in a very short period of time, and it's given us the opportunity to experiment with different methodologies of gathering business.
Give me an idea of what the service is. People find out you pay a higher interest rate on that, or what's?
We usually find that that we're in the top 15 to 20. Given the product set, the top 15 to 20 in the across the country, and we gather deposits from as far away as California. Basically, all 50 states we've gathered deposits from.
And because of a little higher spread that the person's going to get on a money market account or a 6-month CD or something like that,
They're willing to come over. But the flip side of it is it costs so much less to deliver that product. So we don't have the cost of bricks and mortar. We don't have the cost of so when you mix it all together, even though we may be paying a little bit higher rate,
your effective cost of operation. Now I noticed that maybe 2 years ago you opened up a branch like in the 5 towns of Lawrence and some other places. I mean, the dime of Williamsburg has been around since 1860 or something like that.
We're coming up on 150 years.
Yeah, it was pretty close, okay? So how come you opened up a new branch? I mean, is it for deposit gathering, or is it more community business, or do you want to lend in that specific market? Is that how?
Well, it's mainly deposit gathering. The loans are basically originated through the main office. There's a big broker relationship between the banks and the mortgage brokers. So we get quite a bit of our production that way. So we mainly raise deposits at the branch sites. We also have a small internet banking operation. Our feeling is probably quite not like John's in that we don't think those deposits are as sticky. Rates go up, they go up fast. I think they're going to leave there, and we disagree on this. But I think they'll leave the internet faster because it's so much easier to change. And you mentioned your 15th. They'll go to the 14th bank, and maybe it's a little higher rate. So
right, it's like looking at the Ally, Ally Bank and all the rest.
It's strictly internet.
It's strictly internet, and there are people who play this, many of them are, let's say, senior citizens who are looking for the higher yield on that situation. Now, have you opened up branches, bricks and mortar, recently over the last
Yes,
couple of years?
over the last few years, we've opened probably one a year in Upper Montclair, Ramsey, Clifton, other parts of New Jersey. We're trying to expand our footprint.
Now, you don't really have branches. You have branches, but your branches are really operating within office buildings, correct?
That's where we're trending to. We do have branches. We are presently have branches in 3 states, Pennsylvania, New Jersey, and New York. We have a branch in Rybrook. And that's your traditional brick and mortar branch that services both commercial and consumer clients. Our model that we're leaning towards is really a branch that's on the 2nd floor or higher, or away from the retail. We will service retail clients. It's just that we rely on more of relationships. So we go to the client rather than we rely on the client coming to us.
Yeah. Technology is a big thing, and we were talking prior to the show that with remote deposit, with scanning, a lot of people are doing that. Would you say that's helped bring deposits in? Has helped to retain clients for all of you?
Absolutely. I think it started to level the playing field. So, Chase may have 300 branches in the New York metropolitan area. We have 17. So in order to induce those customers to come with us, we have focused a lot on deploying those scanners, and we were very, very aggressive early on in doing that. And as a result, we're able to bank customers that we would not have ordinarily banked.
Vinny said that his average loan is about $1.5 million.
Correct.
What size would you?
Ours is probably about $1 million. Probably
Yeah.
about $1 million. Still a little bit south of.
We're about the same. It's a funny coincidence.
And what do you see customers?
We're in the $4 to $5 million range on the C&I front, but we do work on smaller credits. We'll do a $250,000 facility, and at times even smaller than that. It really depends on the need of the client.
Vinny also brought up an interesting fact, which, in certain markets, and many years ago when I was younger, brokers were looked upon as the bad person, okay? And in today's situation, especially our good friend Joe Ficalora and others, brokers are very important. And even major borrowers, sophisticated borrowers, are saying, I'll see the deal from a broker because they know how to package it better. Do you feel that way also? When you get a deal from an intermediary, do you feel the same, or you prefer to see it from an individual?
We have both. We prefer to deal directly with people, but generally sophisticated people. If you get an unsophisticated borrower and you're dealing directly with them, everything's a problem. They're very disorganized. Brokers do package everything properly. They've got a setup sheet that has all the information on it. And even a very sophisticated borrower will prefer a broker because he knows who's going to close, who's going to deliver, and who's going to have the best rate and also the best execution.
John?
And I think I would agree with what Kevin said. The value, I think, of the broker is that the broker has a really good idea about what your lending criteria is as a bank, and as a result is probably better able to match a given customer's needs with the needs of the bank. So the broker scans all of the banks available and knows that this particular bank prefers this, and this particular bank prefers another type of underwriting. So it's a very, very useful part of the.
Would you say most of your business is broker?
I'd say the majority is, yeah. You'd like to see more direct lending, but in the metropolitan area, it's more broker-driven. And I think that's because the brokers are more aggressive, and they will go out and solicit building owners for their business and then bring it back to the institutions. And as Kevin and John both say, the broker is knowledgeable. He's able to put a package together, and it makes it a more efficient operation for us. We can process a loan much quicker with a broker rather than going to an individual.
Here's a question. There are banks, and we were talking a little bit prior to the show, that there's the mega banks that I started the opening of the show, and then there are the banks who are less than $1 billion. Now, I believe, and a number of people have said to me, that the government really doesn't want to see these institutions to continue. Do you think that these, because a number of years ago there were a lot of startups, okay? These small banks, everybody wanted to be a banker, especially in New Jersey. There was a lot in Long Island and all these others, and they went together. They put 12 people together. Either they did a public offering or private offering. Do you see that element? Some of them grew, to a certain level. Do you see that with Basel III and with other things? Do you see this continuing, or is that over with? That situation with the
I think it's over with. The small mutuals will stay around because they don't have shareholders to account to. But the small public banks, I don't see how they can survive with the cost of operating.
I don't think there's been a new bank licensed in probably the last 4 or 5 years.
Yeah.
I think the majority of the problem banks that went out of business during the troubled times we just have gone through were all relatively new banks. Most of them weren't banks.
Park Avenue,
Sure.
Liberty Point Bank.
Exactly.
And, those were
And that's unique to New York. When you get into the surrounding areas, I think there were a lot of small banks that were newly formed. And as you say, you got 10 people together, they each put a couple of $100,000 in, and they were only required to raise $5, $7 million in capital. Today, I think the regulators are looking for $50 million in capital before they'll authorize a bank.
And then the restrictions in the early years are significant enough so that the ability to grow that bank in that period of time, in that first 5 years or so, is very, very difficult. So I think you add those up with the additional regulatory burden that is hitting all of us, and you have a prescription for very, very tough profitability climb for banks that are just starting out.
What about credit unions? Credit unions are an entity that I know many regular bankers look at with a skewed eye.
They're our enemy.
That's exactly, you were nice, I was about to say that. But they're the enemy because they don't really pay taxes.
Right.
Okay? And, there are certain people, as we would say, imploding on your business. A very good example is Bethpage.
Sure.
Which was, originally from, Grumman Airlines, Bethpage Federal Credit Union. They're like a $4 billion institution. And they're doing both C&I and they're doing real estate lending. And they have become a very aggressive lender. Now, there's a group called Progressive, who I know the guy who runs it. He's a very sophisticated guy, but he's doing some construction loan, some financing, and then there's Melrose. Okay, so how do you see? Are they major? Are they competitors? I'm not saying major, but do you see them as a competitor?
Yeah, I think they're significant competitors in a lot of ways. I know credit unions have been heavy in the taxi medallion business as well as the businesses that you mentioned. And when you have, we're sitting around here and 39% of our bottom line goes to Uncle Sam, and 0 on their bottom line goes to Uncle Sam. So it's a very, very different environment that we're dealing with. In addition, credit unions were originally set up to deal with certain restricted populations. Somehow that's become
right. It was an open. They were closed because they couldn't get that group. It was tied in like
with the IBM or the
IBM or something like that. And now when you hear of a Bethpage who's spending more money on advertising and everything else, they'll do anything. I remember, they're financing student housing.
Right.
So they're.
But on the deposit side, as John is saying, as long as you're breathing today, you can
if
basically
you
open
walk
an
by,
account.
if you walk by a Bethpage, you can be part of Bethpage.
It's
There's
supposed to
no-
be a restricted field of membership, and they've made it air-breathing mammals, I believe.
Yeah.
So-
I mean, the newspapers are full of ads for PenFed. Have you ever seen them? Big full-page ads in the Times, and it's Pentagon Federal Credit Union. And for whatever reason, they're soliciting tons of business up here.
I mean, USAA operates specifically for their market. They're a bank and they're sophisticated. Where do you see, with Basel III, with the regulations, what effect do you think that's going to have on small community banks? Because there's going to be more expense to operate. I mean, what do you?
A lot of consolidation.
Yeah, I think there'll be consolidation on one hand, but I think that that'll be the lower end of the spectrum. I think what you're going to see on the upper end of the spectrum is that large banks will be hampered by additional capital requirements. There are certain layers of capital that community banks under $15 billion, for example, will not have to deal with, and that net could be very helpful to banks our size.
Now, your fee no longer mutual at all, right?
That's correct.
No.
Okay. Well, what is a mutual? I mean, for my audience, what is a mutual bank?
Well, they were originally formed to, like a credit union, to serve people who couldn't otherwise get banking services. And they were pooled funds of the community, and they're technically owned by the depositors. And if they were ever insolvent, it reverts to them, and that's why they get subscription rights when mutuals convert to public. There's still a few of them around in New Jersey, Massachusetts. There are quite a few, but they really are, a vestigial organization, really.
Do you see? The mutuals. They call the second, like the investors, is going to do the second step. So if they raise the capital, either they put it out on loans or they use the capital to buy a bank, right?
Sure.
On the situation.
Or they can expand organically.
Organic, right.
That's another use of the capital.
So here's the question: how do banks like you get the right type of talent to service that community? Okay, there's a certain number of people coming into the market each year. Okay, you said to me before you were in pharmaceutical, before you got into banking. Okay, you were in leasing. I know that before. You were in appraisal before you got a title and appraisal over here. You were in politics and other things. How do you get that next level of finding the right people to work for you, to take care of that role of servicing the clients, both in the real estate division and both in the C&I division?
I think what we did is we really built it up from our internal relationship. So I came from a commercial banking background. When I came on board to first as a chief operating officer, then as CEO to run the company, I had my contacts in the commercial banking arena that I was able to bring in. They had their own contacts that they were able to leverage. So we really started to build out that way, and we've continued to build that way. And I think that now we've developed a pretty good reputation as a quality employer, and we've got very, very good retention rates on our staff, and it's a good place to work.
How hard is it for you to get new young employees?
There's a lot of turnover at the lowest level, the clerical and the teller area. But as far as mid-level and upper, it's not hard at all because we pay very well, and it's a great place to work. Our ESOP and stock benefits are fantastic, and we hire strictly through networking, word of mouth and knowledge of people, and we've never used a search firm. We've been very successful.
A lot of our young people, we've established for many years a training program internally where we'll hire kids.
You also give them an opportunity to go to Peter Luger's, right?
Well, that's a fringe benefit.
That's a fringe benefit, right.
But you go there and you eat fish, so that doesn't work too well.
I know, with you.
But we do have a training program. We'll bring in 6 to 8 college graduates, half of them probably from our staff that work with us part-time over the years, and put them through a cycle of going through all the departments in the bank and advancing through the bank. And that's been very successful. And our retention rate on those people are fantastic. Most of my senior guys in the lending area and everything else have been there for 30 years and started off in that management training program.
Yeah, but part of the reason that people stay at your bank and also yours is that, the ESOP. And, part of it, they've been there X number of years and they have the stock and everything is over there. And if you leave, you lose a lot of those situations. That's a great thing for retention, but also difficult sometimes for turnover?
Well, it's favorable for us as far as
I
mean,
agree.
it's unfavorable maybe for the employee, which I don't think it is, but it discourages them from leaving.
Yeah, my employees this year received a 31% extra compensation from the ESOP because we paid a special dividend. The ESOP was such a strong kicker, leveraging the ESOP benefit for the year.
And even though they can't have direct access to the ESOP, they receive the dividends on that. And a typical employee with us who's, I don't know, vice president level is making maybe $100,000 a year. He's getting $25,000, $30,000 a year in ESOP dividends because he's been there since the inception.
That's why they don't want to leave you.
Which is fine with us. We're very happy with that.
Why does somebody go to a startup bank like you?
Well, you first have to have that entrepreneurial spirit. But then also you need to be a seasoned banker that likes to deal directly with clients rather than parcel them off to an 800 number. So what we offer is really nothing new. In fact, we look to our past to develop our credo and our model. I call the model the only client model. It's very simple. Make every client feel as though you're only client. And we do it through a single point of contact. Now, when you couple that with the ability to service all the clients' needs on the personal side, commercial real estate, commercial and industrial, and that of their families and friends, then you have a reason for someone to build these relationships that are long-standing, and then you reward them accordingly. You pay well, we pay at market, but we also incentivize good behaviors. So the reason is you need to be entrepreneurial, you run your own P&L, and you build your business.
Where do you see your world and the world of banking in 2014?
I think the economic environment is such that we'll see some growth. I think it'll be it'll continue to be in the New York metropolitan area at least it'll be a fight over market share predominantly, but we'll see a little bit of growth in the market. Clearly, real estate has returned very well. There's a lot of refi activity going on. There's some purchase activity going on. The area that I think that we won't see a lot of growth is in the C&I business. I think businesses are still reluctant to make those multi-year investments in either staff or in capital expenditures.
We see improvements in our pipeline. We hope to continue to grow and flourish in 2014.
If you're doing real estate, and I know you've done it with some of your clients, sometimes if it's a good client that you've had for years, is there anything wrong to provide a line of credit? And you have lines of credit for certain of your clients. Have you offered lines of credit to some of your clients over the years?
No. We will offer secured lines of credit as a second loan behind the first.
Yeah, but I want to have my hand. I mean, secured.
No, the rate is not that much different than the initial rate.
Secured by what?
Secured by real estate.
So it's a
We've done this
secured loan, okay?
But the real estate is being secured anyway by the first mortgage, which we also have. So the client will come into us and say, look, I need to borrow X amount of dollars. We look at the loan. If the loan to value is there.
You know, I'll go to Pawn Stars and I'll go to the pawn shop and I'll give my watch.
Go to the Indian reservation.
I'll go to the Indian reservation.
Well, the rates are more if you do that.
Right, no question.
But they're still reasonable rates.
So I think what we've been able to give my audience is an idea that community bankers are surviving and continuing to survive in the future, and they service a very important role for the community and the marketplace, especially when the big banks are really questioning where they are and who they want to deal and who they grow up to be. And I'd like to thank John, Kevin, George, and Vinny, and I'll see you next week.